Okay. I know. I'm still making some notes so that we can actually pretend like we're
I see
coherent on
Linda. I
the
feel like
call.
we're back in Revolve. This is fun.
I know, right?
Yeah.
Well, welcome everybody. We will get started because this 30 minutes does tend to go by pretty dang fast. Welcome. I'm Joel, great, joined by my partner in crime, Tim Thompson, here, and this is the weekly briefing where we pause for 30 minutes each week to talk about what's going on in the industry. So if you're in the creative industry, the production industry, what are owners and creative leaders talking about? Or what are things that maybe we inside RevThink are seeing being kind of on the inside or under the hood of a lot of different companies? Or what's the hot button topic that everyone's talking about in the community? And Tim, this week, I guess I should stop sharing my screen so I can actually get to
Man,
the real conversation. So I'm going to spotlight you and me. Oh, wait, you've already got me
I did all that.
spotlighted.
Yeah, I've been
Okay.
technical directoring while you've been talking.
Man, you're on it. Uh, so, Tim, here's the thing this week, right? I know a bunch of people probably tuned into this because they saw the word unstuck. Is that the word? Right?
Yeah,
The
stuck is very sticky. If you say
Yeah.
stuck or unstuck, yeah, that's a sticky conversation for sure.
So the genesis for this topic today, man, I don't even know where to begin because Tim, it's just been a brutal year. It's been a really weird, anomalous, is that the word? Year,
Sure. I'll go
right?
with that.
Can so I want to ask you a big question, but give us some context from where you sit, going back to think back to last fall when like big tech started laying off people, and by the winter we started noticing ad budgets shrinking and all these other trends. What's happened over the past 3 quarters?
Yeah, or even if I went back for the last 2 years, you can say last year was such an incredible year. This infusion of capital in the economy was great, and corporations were spending, and companies that we work with were growing, and like it just seemed like a fast paced, easy kind of mechanism that people can kind of get a hold of, understand some growth, and have some wins they haven't had in the past. So best year ever kind of moments. And
Yep.
then, no surprise, the economy needs to slow down because of inflation. So inflation, when you go against inflation, you basically just vacuum cash out of the economy. What money used to be there just doesn't exist anymore. And with prices going up and dollars decreasing in people's pockets, we get a slowdown of spending, which is what we're supposed to be doing in and reversing the economy or reversing inflation kind of moment. But then we're also hurting, right? So these things that we've been used to and team sizes that we've had for the last couple of years are now being restructured. However, what's interesting from our seat is that there are still some universal features that have always been true. And even though in the good times and now we'll say a rougher time, some of these elements still seem to be true. We identify them as the three legs of the stool, which is basically these three elements well, I should say ingredients, these three ingredients, when they work together, create like a flywheel effect for your business. And what happens is it's a perpetual earning machine. It basically has an engine that's growing and running and building on itself. And it begins a momentum for your business that has potential to grow to a certain size before the next infusion of ingredients have to be mastered and then have even more momentum to keep the machine going. And that flywheel effect of those ingredients haven't changed. And that tipping point is still very true.
So to what Tim is mentioning, many of you know we have this framework we often refer to called the 7 ingredients, which are the main areas of business that we all have to master on this journey to getting to a resilient studio or production company. And let's see, Tim, if I was going to rattle them off, don't hold me to this, but think of creative, production, sales, finance, marketing, operations, entrepreneurship. Okay, I got all 7.
Yeah, yeah.
That's pretty good. Uh, So also you mentioned these three legs of the stool. So for many of you, you may or may not know, next week we're going to run a webinar talking about these three main areas, like these three fundamental things that we've got to master to create the flywheel that you're talking about. But Tim, where I would love to start, if you don't mind, can I pretend to be one of my clients, right? So these owners that I'm working with, can I pretend to be the aggregate of them, and you're going to be my consultant, and I'm going to take you through, this is where I'm at right now, and this is really, really hard. What would you advise I do?
Sure. So we're stretching ourselves today. Is that what you're saying?
Something like
You're gonna
that.
throw questions at me. I'm a little worried. You've been writing down something for the last 2 minutes, and now you're gonna fire questions at me. I think
I got my notes here.
I guess I'm ready to go. And I guess any other
Okay.
questions people have, throw it out here. Maybe you can save me from some of Joel's questions he's gonna throw at us.
Yeah, by all means, drop stuff in the chat as we go along here. Okay, so Tim, I'm running a studio of some undetermined expertise, right? We're not going to get into that. But here's what I know. This year, just what I've been able to do in my studio, we've creatively taken a big hit because we just can't produce the level of great work that I know we're capable of producing. That's one big problem. Another problem is production. It costs a lot of money to maintain this team I have. Okay, you hear that?
Yeah.
Right? And I don't know how to manage all these resources in a way that that are sustainable or much less profitable in terms of how I'm managing production. And then the real zinger that is on everyone's mind is sales. That, let's say this year we went from being a $2 million a year operation to this year we're going to maybe barely break 1 million.
Yeah.
It goes without saying that is a huge problem. So I'm now looking at the business that we're running in the marketplace and what's shifting in the economy. And I'll just kind of recap. All my big tech clients kind of went dark last fall. The ad agencies that we used to work with are kind of quiet or in decline. They're being much more picky, and they're asking us to pitch, but not as much, and they're passing on us and all this. Our broadcast and linear entertainment clients are withering. Those budgets are not going anywhere but down. And then I'm also seeing this shift, like we were talking about today in the community, from traditional advertising and marketing to influencer advertising and marketing. And I'm not in that business.
Yeah.
I'm not an influencer. We don't create that kind of content and media. So I've just painted a really big, bad, ugly picture for you. So
almost an impossible one, because if you're $1 million business that is in all those segments of industry, I have some really clear advice to just choose one lane at the size of the business of $1 million, right? You can't solve all those problems across all those industries all at the same time.
Okay, I'm writing that down.
Yeah. No, I think you know what's interesting is that when we often think about, from an entrepreneur point of view, we often think about growth. The first thing we have in our mind is numbers. So we think about the number of people that work for us, or how much revenue we generate, or how many projects I did, or the budget of those projects, or whatever this number is, because it's one of the most clear indicators, numbers, that there is growth, because 2 is greater than 1 and 4 is greater than 2 and so on. But growth actually has other components to it than just size. How many projects we did to make $1 million, how many people it takes to do those projects, and so on. It's true, right? Mathematically, you can look at it and figure it out. But to go from 1 million to 2 million isn't just simply doubling. If you had 10 employees at $1 million, it's not 20 people at 2 million. If you had to do 10 projects for $1 million, it's not 20 projects for 2 million, and so on. You don't just look at the current numbers and double it and get the same result, because a $2 million business is more complicated than a $1 million business. Who you hire, how you hire them, and what roles they play is very different. You might be able to take a $1 million business with 3 people and get to $2 million with 4 people. if the last person you're hiring had a sales capability of generating leads, qualified leads, or differently qualified leads than the ones you're making at $1 million. So one example I often see that $1 million business has is that they often sell commodity. They went from 0 to $1 million by commoditizing themselves, charging by the hour and by the rate and by the deliverable. And that's how they got to the $1 million, which is a great starting point. But 1 million to 2 million is no longer just twice as many commodities or twice as many features or twice as much time. That's not going to get there. It has to be a different type of client so that the workload, you're capable of doing the workload, and the value you're presenting is different. And I think the maturity factor that a $2 million business and above understands, and why it's hard for them to go back down below 2 million, is that they've qualified projects differently for their business. They've learned something new. They're not ever going to make those mistakes again. And they're not going to commoditize themselves in the same way they did before. They retain above 2 million and beyond, at that point. They don't go from 2 million to 20 million. There are other evolutions, but that's just one that most of us are on the tipping point of or have gone past, is this $2 million mark where you get a new basis for your company.
Right. So it sounds like the extrapolation from me being 1 million getting back to 2, it's not linear. It's not just doubling what I'm currently doing. So where would I start? Because obviously when it comes to something like sales, I don't know what to do, because most of the work that's come in, it either came from that big gorilla client, that whale that was always there, and all of a sudden, they're not there anymore. Or it came from this like repeat and referral, and like it just kind of showed up because people know me, they like me, and the work is just kind of there.
Yeah, what's interesting to me that I've seen is that, a $6 million business had to retract down to 4 million, or a $10 million business that's now down to 6, or a $4 million business that's hovering around 2. In those cases, they're taking really big hits. And I think the big hit is also related to that value proposition. How many buyers are there in that marketplace to buy those types of services? The service that you provided to get you above the $4 million mark, the value of that was once high, and now I think it's being questioned. But what's really interesting is companies that are $1 million last year are approaching 2. So in a way, the economy basically said, hey, you folks that are used to commoditizing yourself, I'm going to send you more work in the commodity field. And in a way, these companies that had a moment and struggling because they've been commoditized are actually in a deeper marketplace, because the marketplace has hit that commodity field, right? I'm not telling people they should commoditize. I'm just telling you the phenomenon I'm realizing. What will happen is that $1 million business that is selling today will eventually evolve into that new marketplace of higher value per project items. They have to. You just can't grow in doubling in people and size. So the minute you change the rules, you change the marketplace and availability for projects in that marketplace. So the money is being shifted down towards the lower commoditization, but the companies that are used to adding more value are struggling to find projects in those fields.
So I love this question that Ryan just dropped, because it maybe even puts it even more concise. So I'm going to steal it and say the growth isn't linear, and potentially the people that one needs to go from 1 million to 2 million isn't the same as what you had from 0 to 1.
That's exactly right, Ryan. Exactly. Like that.
So
if you did it on the block thing, you'd say, hey, 1 million was one person, 2 million was 2 people, 4 million was 4 people, and so on. Like it doesn't at all look that way.
Yeah. And so it's funny, I'm actually having this moment, Tim, where I'm thinking back to when I started my actual business. So I'm not pretending anymore. That I remember I had visions of like what my team would look like when there were 6 or 8 or 12 of us or 15 of us or something like that. And then as the years played out over the next 2 decades, what's weird is the company that actually grew to be 25 or so people was totally different from what I imagined when I was that young animator thinking, oh, I'm just going to have 15 animators sitting around and we're all going to be doing, like, it was radically different. So, okay, now where do I begin? Because if I have to say I'm going to move forward, I got to go to war with the army that I have. Right. So the team, the resources, the talent, the expertise that I have building from 0 to 1, I now got to take that out to the marketplace as I grow from 1 to 2, or try and regain the ground I lost and go back from 1 to 2. But if I don't know what it's going to look like when I'm going towards 2, I don't even know what to aim for.
Yeah, Ryan. So if you had to meditate on that a minute and just say the creative execution of a project, of a company under $1 million or a company that's hovering at $2 or $3 million, what's the key factor in the pitch? When we're pitching to that client, you're saying, hey, at $3 million, at a $3 million business, what are you doing differently in your pitch and the value proposition than you would have when you were, at $1 million business?
I don't know. I feel like I'm going to say it specific from right now. I feel like there's a self-fulfilling prophecy going right now. Like we have a team that was built to service a certain type of work that was profitable, not hard to do, fairly fast to make. Now that not that we don't do other things, but that place where we would get calls, the reactive, just answer the phone and give the calls, right? Where it's like, yeah, of course we can do this. That has now become much more competitive. The turnaround times are faster, the prices are cheaper, and people are willing to give you more, but for less, and expecting double of what you would normally do, right? Like broadcast design, whatever, like lower thirds, title sequence, all that stuff, right? Like broadcast work, that's the bread and butter, right? So like we could say, well, we could bring in more people and kind of try to baseline it, try to keep it at the same, but now there's more people, so it's costing more. But I also don't think that that's like the work we want to all as a team lift for as well. So like hearing you say that, it's like I feel like we're almost built for a different time. And there's a certain amount of evaluating, like, so just continuing to build the way we're building or subtract the way it almost requires a different kind of conversation, because it feels like when, and this is just, I guess, in the circle of trust, like it feels like there's a certain amount of desperation now sometimes when we're being asked to pitch. I don't know if anyone else feels like that, where it's just like, well, we know how to do this. It's stupid that you're not asking us to just do it. And I know we're competing against 3 or 4 other people who are also just like, just let us do it. We can do it. So it almost feels like, yes, we like to do this work, but is this the kind of like environment we want to double down in? I don't know if that answers your question, but I feel like there's a level of confidence that a $3 million company has in saying, no, I don't even want to do this. Like, I don't even know if that makes sense. Like, I don't know what you want to pitch. If you want us to use it, then we can.
Two good points. One is that, are you trying to make your team fit the economy, or is your economy fitting the team? Like, it's like, you almost have to, like, what is the new reality and what is the team size that I need to get there?
And
if clients are asking you to become more commoditized too, you're like, wow, I've spent, hundreds of thousands of dollars investing in my leadership at my team, my head of production and my creative directors, my art directors, and they're less valuable today because I need more animators to get the jobs done than I need people pitching to win new projects.
Or vice versa. Do I need to have half the size of the team who are more conceptual that I can then go and work with other people who can do the animation? Right? Like which way is the market going? Like what's the blend that not only makes sense for what we want to be, but also what the market's asking? Because I feel like there's a level of like, we're just going to continue banging our heads trying to take a 2005 built team out to market in a 2023 world where it's like, yeah, of course it's just gonna be this diminishing returns, self-fulfilling prophecy where like, could we actually make more money with less people doing a slightly different kind of work if the blend was a different set of people? This is very hard to say out loud, obviously. You're talking about people. I don't ever like referring to people as like units, but like if a team is built to do After Effects templates and motion design, and the world's like, yeah, that's a commodity now, which way do you go? Do you take your related expertise and the work you've done and push it towards a world where you could use less people and do, fewer jobs for a higher price?
Really good question. I mean, I think it's
I see
actually
heads nodding, so I feel like I'm not crazy. I
right.
feel
Like,
awful saying it out loud, but at the same time, it is the world, right? Like,
well, did you see Linda's comment here, which I think is like just very on point, right? When you position your firm to be experts in a specific market, if that market contracts, you contract.
mhm.
And it's hard to change your positioning, right? Now, I'm gonna sort of tee you up a little bit, Ryan, because I know I'm gonna see you week after next in New York at this
Mhm.
6 to 7 summit thing, right?
Yeah, thankfully it's not called 5 to 6.
Yeah, exactly. It's definitely 6 to 7. But here's the thing: in my list of all these declining things, big tech, ad agencies, the broadcast and linear, and then this shift to influencer marketing, the one conspicuous thing that's not here is what I will just collectively call brands or direct to brand direct, and so forth. I think that's conspicuous because maybe what has been happening is we're getting caught because it's been fairly easy. We've been working with buyers who know how to buy from us. They
Mhm.
call us. They get their thing. It's a pretty quick sales cycle. Somebody calls you and a few weeks later you're starting on the job. Very different when you want to work with brands. I mean, totally
Mhm.
different. But when you look at all of these, what I would call easy paths to cash, such as
Mhm.
agencies, broadcast, etc., if they're all retracting and we're now saying, well, yeah, but if I want to go work for brands, that's going to take 6 to
Mhm.
12 months. Maybe it's
Yep.
just time for us to put on our big boy pants and say, better start now.
Yeah. Yeah. I mean, I feel like this is why I'm really excited about is it next week, the 3 legs conversation? Because
Yes. The webinar.
even though internally we look at, like, we do a lot of different things, I think you could still lump all those different things into, we're just jumping on a pogo stick of one leg, right? Like, even though it's like, well, we do broadcast, we direct a brand, and we do explain, and we do, but it still kind of all feels like it's cut from the same cloth, and we're missing the whole world of other things we could be doing, and you hear it once, you hear it twice, that's one thing, but like, it's easy to get busy with a lot of low-hanging fruit and not that high budget projects because you feel busy and everybody on your board has a job to do. But then when you look at it, it's like, yeah, but wouldn't it be better if there were just like 2 or 3 less people and those jobs were significant and they
Yeah,
had
Ryan,
like more weight, right?
that's a perfect example of what this flywheel effect can do for you when you kind of have the right systems in place and all the pieces are working together. Because you're exactly right. If you're only looking at certain numbers, let's say you're saying, well, busy is good. And you're like, okay, well, busy
Yeah.
is good, but the margins are small or the growth potential isn't there, then I'm actually making bad investments for the
Mhm.
long run. Sure, the next 3 months is great, but the next 3 years, I'm going to have to dig myself out of a twice as big of a hole than if
Mhm.
I did nothing at all. And so there's these really tricky moments as business owners, but we're trying to navigate through the opportunities that are in front of us right now that we have to say yes to. We have to say yes to them. We have
Mhm.
actual bills to pay. My kids have to get to school. Those things are real. But what's it really costing me? You have to know that as well. And usually when we put strategy in place, this kind of roadmap towards success, the thought process is like, let's just take the truth of reality and of today, and then know where we want to be in the future, and then start making those decisions. Do I
Mhm.
survive for 3 months and swap out people? Do I go from staff to freelancer or freelancer to staff to solve some of these problems? Do I hold cash back or push cash forward? There's a lot
Mhm.
of variables in relationship to this. But one of the
Mhm.
most primary ones is also, how am I understanding what the client's needs are and qualifying those needs to match my business, right? If I'm being asked for something that just doesn't make financial sense, as hard as it is, sometimes you have to walk away, or it doesn't
Mhm.
make creative sense. You have to walk away, even though it feels really, really good right now. But if you take that job, you're just not telling yourself the truth, and therefore not pivoting soon enough. You're waiting to
Mhm.
pivot, and you're waiting to draw this thing out, and you fall further behind before you pivot. So we're trying to get people to like face the reality as soon as possible and then
Mhm.
grow from that moment.
Yeah, I don't know if this makes sense to anybody else, but it's never a good feeling that you feel like you're the person walking to the 7-Eleven buying the $25 of scratcher tickets, hoping you get enough free tickets to come back and get some more.
Right,
And
right.
it feels like that sometimes, where it's just like, yes, we have tickets in hand. Are they going to be a lottery ticket? No, they're definitely not going to be, but you take them. It's never a good feeling, right? Like,
Yeah.
especially when you know there's something else out there.
Yeah. Or if it doesn't match, aren't you better at being half the size and doing something that has greater value than the twice the size and just barely making it by?
Right.
That's the
Right.
matching the economy. And you're right. It is. There are people that we're talking about here, or strategic positions that we have to put people into. And we're often trying to find people that are willing to grow with us, grow into their opportunities, understand them, and pivot with us. Those are the tricky moments of how do we understand who's going to be on our team as we move forward.
Right.
Well, who else here has a question that they want to drop in? Maybe you want to ask a question of Ryan. Let's put Ryan in the hot seat for once. He's like, no.
Yeah, the guy scratching the lottery tickets. No, I don't know if you want to do that.
Well, Jeremy's already given you props. He said, Ryan,
Thanks.
well said, and we're there with you.
I really like Linda's question here. Would you like me to read it? Okay.
Sure, go for it. Welcome, Robert.
How do you pivot fast enough? The market is always looking for expertise. How do you demonstrate it? Which I think is fair, and I think that's kind of somewhat what you're saying, Ryan, too, is when you start turning down work because it doesn't fit whatever you're trying to do, you have to pivot to get more work. Is that right? Kind of, Linda, is that? Yeah.
Yeah. This is where the factors method fits so well into these decisions, because in the factors method, the first place we start is basically a roadmap of decisions you want to make for the next 12 months. And then we finance those decisions. We look at who that is, the opportunities, the money it's going to take, and we essentially budget out your company like you would budget out a project from beginning to end. You know, it's what take can get there. Then we convert those numbers into other smaller decisions, those that your producers can make on a project, and those that you have left, or resources you have left over to make corporate decisions. Right away, just by looking at the percentage of what can go to the directed costs for the projects and what can remain indirect, you know right away if you're in a healthy position. If it takes 70 or 80% of all revenue to finance your projects, you're in a very, very, very difficult position. So right there is a correction that needs to take place of these projects aren't qualified. We're not getting enough money from that work. We need to systemize ourselves in a better way. And then vice versa. If it's taking you 70 or 80% to run the corporation and you have very little left to produce the projects, you will also find some difficulty. So just using the factors method to map out those decisions to see what percentage of resources are available, financial resources available to finance those decisions, you'll know right away, where do I need to cut? Where do I need to grow? And how do I get there? That gives us the first beginning of our roadmap. Now, there's a lot of variables for that every company is going to have to deal with: client, personality, talent base, resources available, and so on, to go from that point A to point B. But that's the very first indicator of the map ahead that we have to conquer.
I'm going to add this, Tim, and I can even use Robert as a.
I'll drop you off, Robert. Oh, we can leave Robert. You want Robert on stay on? Or you want to be dropped off?
Well, I'm just going to use Robert as an example because he's a star student.
Oh, yeah.
You can also take that factors report and create, because it's forward looking. Back to Linda's question, you can create scenarios. Like, what if it's an up year, right? Our positioning is solid and we're creating a lot of value. We're bringing in a lot of revenue. What if it's, we maintain what we did last year, versus what if we do a down year? And then you just see how it plays out. You look, 1 quarter later, you open up those scenarios and you say, which of these is most accurate? And then I guess here's the hard part. You basically say, I made a decision back in the first week of January that if we were having a down, I would make these tough decisions. You don't wait. Like you've taken the emotion out of the decision because you made it back then. So you're already pivoting. Tim, you're not
right. That ability to premeditate, plan ahead. It doesn't cost anything to make an extra duplicate version of the spreadsheet and try some other scenarios, just to get a sense of what you might or might need to do moving forward. And then when that moment comes, you're not panicking. You already thought about it. You've actually been seeing it evolve. You make the decisions and you keep on growing from that point on. And that's what we're looking for, is development, maturity, and viability in these decisions, not just doubling the numbers or doubling the people. That's not a sense of a growth always. It has to be the ability to move through these decisions is really what we're looking for in business ownership.
I think we're about 1 minute over on time. Robert, you have a final comment? You want to drop a little bomb on us?
No, I'm not dropping any bombs, but I don't think I have anything that astonishing to say. But I definitely have kept a couple years ago, even last year, kept a couple of employees on longer than I could afford them, thinking that it was going to turn, and it ended up just kind of eating away at the bank account. And in hindsight, maybe I would have had to make that tough decision and let some people go, or had an upfront conversation with, I'm heading this way, we are heading this way. What can we do to drum up some sales? And if that point you have to take on some bullshit to save some heads, you do it if it makes sense to go after that sort of thing. But having to look out and having a non-emotional kind of agreement with yourself that 3 months from now, if it looks like this, we have to make some tough decisions, really kind of takes all the hesitation out. I would imagine. I haven't actually used it for that yet. I've got a couple people I have my eyes on just so I can test it out. So I'm literally not making sales right now just to do it.
That's great. And you're going to be in the Factors Method Accelerator in a couple of weeks, Robert. We're going to make sure you get in there so you can put these spreadsheets in place and show us how you've done this in the past. But you're kind of hitting it right on the head. It's like, hey, the minute you take money out of your savings account to pay for your business is the minute you knew you've tipped over. And you're so afraid of making a decision because you haven't really planned out too far into the future. So we just fill in the short term, and until you actually have to make that decision for a totally different reason because you have no money.
Yeah.
And that's a really unhealthy place. It's to cut back, have some resource available, and then to grow and to pivot and to move forward. That's what we need to be in. It's so difficult. These are not fun conversations, but it's part of the reality of business ownership.
Ryan, I'm going to mention your question is really interesting about the tactic of going into like this stealth mode thing. Mm-hmm. Here's my thought. Wouldn't it be interesting to do a year-over-year analysis of a sales report and say, what's our average ticket for broadcast or for brand direct or for whatever the categories? Because I bet there's some patterns where if you're honest with yourself, you would say things like, wow, broadcast, the budgets are in decline, the frequency's in decline, like the whole thing's in decline. So you would have some data to make an informed decision rather than, well, we just need to get more smaller jobs and we'll still make as much money from broadcast. It's like, wait, what's the trend? What's the trend? Like this market is dissolving. I don't know, just thinking out loud.
Yeah, it doesn't seem like you want to pour more water into a leaking dam just to keep it at the same level.
Right.
Unless you're a rich boy.
So
exactly. Unless you're getting ready to be that. Yeah, exactly.
Well, we do have to go. It is 4 minutes past our allotted time. Thank you to Ryan for jumping in. Thank you, Robert, for jumping in.
Thanks, guys.
Appreciate you guys. Tim, we're going to be back next week. When are we doing the webinar, the 3 legs of the stool? Is it this time next week?
Yeah, if you're in community, you can RSVP, be part of the event. And if you're not part of the community, you can also RSVP. You just RSVP through Zoom. But if you're RSVPing on Zoom, that means you should become a member of community. That's a much easier way of doing it. And then you could set a calendar reminder and that kind of stuff to remind you that is coming up. I'm really looking forward to that because there's 2 elements. One, just keeping this conversation going and being really clear of what those 3 ingredients are and how they work together, and really teach people a roadmap from point A to point B and some of that strategy for growth and opportunity. But also why and how we use the upcoming accelerators to help people work through some of those ideas, and how accelerator learning with other people is part of the easiest way of learning and growing and making the biggest changes fast. So the accelerators we picked recently are specifically about this season and this time.
Do us a favor too, if you know somebody who's a business owner or creative leader that might benefit from the webinar, certainly send them that info and invite them. All right, everyone, we'll see you guys next week, if not before, in the community. So on behalf of Tim and the team at RevThink, thanks again to Ryan and Robert. We'll see you guys soon.
Thanks, guys.
Bye, guys.
Bye.